Good evening, ladies and gentlemen. 2007 has begun with the major US stock indices at very high levels, and I thought it might be from interest for you to look at the options data and the cycles, what they tell us for the near-term future for this markets. We take now a brief look at the options data for the S&P January options and the cycles of the S&P, the Dow Jones and the Nasdaq 100. All three indices and the data from the options market tell us we have to see further weakness in the days ahead. So let's go on and lean back. So, well folks, let's begin with the charts. First we take a look at the breadth of the market. We see here the S&P 500 cash index, and we see here the advanced decline line based on the 500 S&P stocks. Since mid-December, this advanced decline line makes a negative divergence, and this is telling us that the market hasn't reached the low yet. The uptrend from the advanced decline line is broken, as also in the cash index. If we see just this chart, I think this could be a major top. Let's go on to the options data. What we see here is a call selling zone based on the January S&P-Futures calls, and a put selling zone based on the strongest open interest data from the puts. The call selling zone begins at 1440 and goes on to 1460. The put selling zone, the upper level is at 1400, the lower level is at 1380. What we see here, the market struggled around the lower end of the call selling zone, and the call sellers defend their position every time the market tried to reach deeper in this level. A lot of charts from the last 2 years have the tendency that when a market reaches one zone and falls back in the neutral area, as we see here, then it will go straight to the other side. That means if this appears here also in the next future, the market should go to 1400 or lower. Mostly the market goes halfway in this level. That means we see here then prices in the S&P March future around 1390, 1385. So the next chart show us the cycles. We do cycle analysis since 6 years, and our projections, mostly we do projections 4 to 6 weeks ahead of time. That means our readers knew at the beginning of November that a low is in work, and the market should rise further till mid-December. Just for information, this is the date in European style. The first 2 digits are the days, the second 2 are the month, the last 1 are the year. Last 2 are the years. So what we see here is a correct cycle high around mid-December. The bar tells us this is the approximately area where a high should appear. We have now a broken uptrend line, and we have a double cycle low at the end of January projected. A double cycle low means that two different cycles, a long term and a short term, both have the same projected time area where this low should appear. If this market goes like the cycle are telling us, then we will see the minimum of 1390 in the cash index, a maximum of about 1360 until the end of January. What does the Nasdaq 100 cycle tell us? Is it different? So let's take a look, and we see this cycle has also a projected low some days earlier than the S&P, but also at the third part of January. We have here also a correct cycle high, we have here a correct cycle low, and the market should fall below this support area. Our target is around 1700 in the next 10 trading days. This is just for information. If a cycle high or low gets exceeded after the projected area, then the cycle high is wrong, and we tell this our readers with this circle. So at last we take a look at the Dow Jones cycles. This is not the short-term cycle, this is the long-term cycle. And as we see here, the long-term cycle has a wrong cycle high. The markets rose after this area, got back and got to new highs till the end of the year. Now a resistance area was reached. We have a broken uptrend. This lower broken uptrend is also broken, and here we see a target around the 23rd of January for a cycle low. I just want to inform you, in the last 6 years I saw always the same when it comes to wrong cycles. The market always goes further, but the nearer a projected next cycle low comes, this will be looks like a magnet. You see, always a market, when a market is rising, it always falls back to the magnet of cycle low. Yeah, you see this every time and every time. This chart tells us the next projection is about 12,150, the 52 moving average. My own analysis is about 12,035 here in this area. So what is this all about telling us?